everyone, I'm going to be going over the reversal and continuation sequence with the MBZ model. Very simple and easy to understand. Now, before I actually dive deep into it, the reversal opportunities within the market, specifically this model, and any other model really, the reversal opportunities tend to not pan out as much. And that's because the driving factor for a continuation opportunity, which is usually the best opportunity, is much better because you already have a set reversal that has occurred, and you're basically just looking for a continuation movement off of the reversal that already happened. So it's very, very optimal to take a continuation opportunity. Doesn't mean you can't take a reversal opportunity. I'll show you exactly what to look for in that regard, but taking a continuation is much, much better. And so what we're looking for is a couple of things, right, in a specific sequence. We're looking for, more often than not, when it comes to the reversal, we're looking for a type 1 to 3 MBZ, which tends to happen after a swing high or swing low gets taken, or we're looking for an inversion to take out, right? So once an inversion happens or a type 1 to 3 MBZ happens, we can then look for a type 4 or just any other type really for a continuation opportunity. And once that happens, we can then look for opportunities within the market. So if we go to this price action here, that's exactly what happened. And this tends to happen quite often. Now, before we start looking here, we can see that we already have a higher time frame alignment occurring. So here we can see we have a bearish type 1 MBZ on the 4-hour chart. It's taking out a swing high, it's reversed, and now this is bearish here on the 4-hour chart. I am on a 15-minute chart to align that time frame. So anywhere within here, we're going to be looking for bearish opportunities. And in here we have a bullish type 4, also a type 2, 2 and 1 sometimes, that's what tends to happen, MBZ. So down here, we're going to be looking for bullish opportunities. So you can see here the market looks like it's choppy, but now we have our higher time frame zones. Easy to work with, right? And so what we'll do is start off by looking at the reversal and or continuation sequence. So what I mean by that, here you can see that we've taken out a swing high, and if we zoom in, we had the opposing candle push into that, but we also have another swing high up here, which is the indicator mark, and we have that reversal candle. So as mentioned in the previous lessons, this is going to be a type 1 MBZ because this candle took out the high, but also reversed past 50% of that bullish candle. And so now we have our reversal sequence, right? This is very important to understand because a lot of traders might just look at this and start shorting. But here, it's pretty much a C minus setup. Did it pan out? It did over time. You can see how it chopped quite a lot. But this is a C minus setup because, again, you basically are trying to capture a reversal, which is very difficult to do within a market in general. It's not impossible, and I can show you what to look for, but this here is not the ideal reversal because you have no higher time frame point of interest over here. You've just taken out a swing high, and now the market's giving you a type 1 MBZ. Now, what you can do is fractalize that and go on the lower time frame for an opportunity, as we talked about in the previous lessons. But this possibly sets the stage going forward. So what do I mean? This sets a reversal opportunity. And as we talked about earlier in this video, we can then look for continuations off of that move to go lower. So if we're going to look at this price action here, I'll show you exactly what to look for. And here you can see that there is a couple of continuation opportunities, right? You have the first stage reversal already, type 1 MBZ. Price pushes up as a type 4 MBZ, but also a type 2 after taking out the swing high. And then it has another type 4 MBZ following that very soon after. So which is the better opportunity to take, right? It's going to be this one here, the continuation opportunity off of the reversal. Very simple. This sets the reversal, takes out a swing high, wait. And this is a different time of the day, but this is a good example otherwise, because it's, again, a fractal opportunity regardless. And so when you wait for the continuation opportunity. And what makes this a really strong A+ setup is the fact that it's in that higher time frame alignment in the same direction. Also, this gray box right here. And it's a continuation sequence, not a reversal. So that is an A+ setup. And you can see how the market does retrace back down. And it is very important to understand here into this, again, type 4 MBZ that we talked about based off the 4-hour chart. But this type 2 MBZ that you see down here, where it takes out this swing low, okay, using OHLC highs and lows, it takes out this swing low and confirms a reversal. Now, is this a reversal or a continuation? The way that I use this model, right? I know other people might classify this differently, but the way I use this model here, because you've already had a reversal continuation, you've taken out a significant low, and now you're within this higher time frame point of interest, which is bullish. I would treat this as a reversal opportunity, not a continuation. Why? There has not been a bullish opportunity in quite some time, as we can see. The last time it happened was all the way over here. So for me, based off this price leg, this is going to be a reversal. And so what I'll do is wait for a continuation up here, and that could look something just like this, a type 4 MBZ. And so once that appears, you can still see that it is relatively close to that type 4 MBZ right there. And so that can be used as an entry. And you can see how taking this one down here is a bit spotty. It's not the best. But taking this one here is much more ideal. And then what you could do, again, is just fractalize the opportunity again, go down to the 2-minute, look for a much sharper entry, and then, look for your targets, as we discussed in the previous lessons. You'll see this sequence happen quite often, right? It is something very easy to understand. So if we look here on the current price action at the current moment, what we can see here is that the reversal opportunity has already occurred. How can I tell? We have a swing high failure. Price is taking out an internal high. It is coming back down, and it is closing through that bullish gap right there, which is something that we talked about in the first couple lessons, that fair value gap. When that gets disrespected, that becomes an inversion fair value gap. I like to use that for opportunities, but also in this case, just to see where the market wants to head. Now, is this something I would take for a short? Nope, not at the current moment. Instead, because again, you're beginning a reversal sequence from this price leg now, I'm going to wait for a continuation opportunity. So you can see how they pop up right here. Now these, and if we scoot this over, you can still see it's within that bearish MBZ. These right here are going to be A+. Compare that to this one here, where it's pretty much in no man's land. Doesn't really have much going for it, and it's the first stage reversal. This is a continuation. It's in that higher time frame zone. So this is A+. And so as price comes all the way back down, we know that's an A+ setup. It revisits that bullish type 4 MBZ on the 4-hour. Now again, what we're going to look for here is a continuation sequence. So something that we could look for is a couple of things here. We can see price is already starting to reverse. It has a type 3 MBZ. It has another MBZ down here, and it's trying to push up, right? Now, is this something that I would take? Well, you can see here that it also has a bullish inversion on the inside. So let me just turn this off very quickly. You can see that bearish gap, price closed above it, and that in fact is bullish. Now, is this still something that I would be pressed on taking? I think so. And the reason is because you have the higher time frame zone, you have the bearish fair value gap being disrespected, and you already have two sets of MBZs. And so what you could do in this circumstance is just go down to the lower time frame and fractalize the opportunity and look for an opportunity for a swing high to be taken out. So here we can see on the 2 minute and 1 minute, we have opportunities within that 15-minute zone. So after it forms right here on this candle, we then get this type 4 MBZ, a continuation of the reversal sequence that's already happened on the 1 minute time frame. So you can see how you just fractalize that, stop beneath that low, take profit on the swing high. And you can see how it's all starting to come together, right? Now again, the point of this is that you want to avoid reversal sequences. So this here is actually a really great example. And I wanted to use the live markets to teach this here. Now, taking out the swing high, reversing back down, type 2 MBZ, it's within a higher time frame zone, which is that 15-minute type 4 MBZ marked right here. Now, is this something that I would take for a short? No. Why? Because based off this current price leg, where price has been pushing up, I would wait for a continuation opportunity to appear. That's more aggressive, right? So if this sets the stage for a reversal, I want to see it be more aggressive, come all the way back down, possibly close to the bullish gap, and have that be a possible continuation to go lower. But as you can see, this is the only thing that we have going for a possible short. So it's not the best setup. And that brings me to the next point. When you have this MBZ model, you can see how it's stacked at this point, right? This here, these MBZs right here, these are just patterns. And so patterns are not that strong because there's no logic to them in regards to the current market structure. There's no higher time frame alignment. And so when you add the higher time frame alignment, it becomes much, much better. But what can we do to improve not just the MBZ model and the higher time frame alignment? What we could do is what we talked about earlier, setting the stage for a continuation opportunity. So again, if we go back to the 15-minute time frame here, we can see that this here is a reversal of this price leg, right? So is that a continuation? No. So what we could do is, if we don't feel comfortable taking those opportunities, because again, the easy opportunities are going to be continuations like this one, we can wait for this bearish gap to be closed through, and that would be a bullish inversion. And so what we'll look for there at that point is a move back into that area, possibly forming type 4 MBZ, and look for a fractal entry thereafter. That would be ideal, and that would be the best opportunity to take. It doesn't mean you should avoid all these opportunities. It just means think twice. Think about what the market's doing with this model and treat it accordingly. Because if we're just entering based off the actual model and treating it as a pattern, then the trade entries or trade ideas are not going to be as top-notch or ideal. But if you're fractalizing it and putting it in this logic and using a continuation sequence, you're going to get much, much better results. And so this is an example on the NASDAQ here. And to go more in depth, we're going to look at a higher time frame example. And to make it easier, here we have gold in the 4-hour, but to make it easier, we're going to turn off the indicators so I can show you how to locate this by yourself, even without the indicators, right? So looking at gold, you can see there's a price leg forming, right? That has formed, pushing lower and lower and lower. Now we have a first stage possible reversal. What do I mean? We have a really small inversion down there. Is this something I would take for a possible long? No, right? It's not something I would take for a possible long because, again, it's the first stage reversal from this price leg. That's just how I classify it, right? As price pushes up, test this volume balance, which is something we touched upon in the previous lessons, comes back down as another inversion right here. So now this here is a continuation opportunity. This is a lot better. And this is something we'll touch upon in the next lesson going forward. But we're still waiting for a continuation sequence. So as price comes back down, we're waiting for price to maintain this area here, as we don't want to see the low get taken out, and we're waiting for a continuation sequence, right? And so as price forms those inversions right there, we're waiting for this area here to show us a continuation. And what we can spot just by eyeballing it, we can see that there is a bullish gap, fair value gap, opposing candle, bullish reversal. So this becomes our bullish MBZ right there from the close to that swing low. And same thing right here, bullish gap, opposing candle, bullish reversal from that opposing candle, close to the swing low from those two candles, C1 and C2. And so now, as we can see, we have our higher time frame zones. Now, what makes these zones much more ideal? Well, the fact that it is a continuation sequence. We already have our reversal. This is a continuation off of what's already happening down here. And so very quickly, we're just gonna look to see and double check if this is a bearish opportunity right here based off the body closure, and it is not. That is perfect. And so what we'll look for here is to fractalize that opportunity. So I'm just going to scoot this over and mark it from the candles that we should start looking for an opportunity on. And we're going to go down to the fractal alignment. So with the 4 hour, I use the 15 minute and or the 5 minute. That's simple. Most of these time frame alignments are very similar to how everyone else uses time frame alignments. You know, it gets passed down the line, and I think it's great information. But for me personally, I like to use the 5 minute with the 4 hour as well. Okay. So if we go down to the 5 minute, we're going to be able to look for opportunities as well within those areas. But let's start off with the 15 minute. So after price forms here, we're just going to look for the same exact scenario. And so what do we look for here? We're looking for price to push into this area after it has formed. And we're going to look for a type 4 MBZ or a bullish type 1 through 3 or an inversion for value gap. So I'm just going to turn on the indicator to quickly scan it. And so here you can see that there is liquidity being taken out, another liquidity pool taken out, swept, and we have our type 2 MBZ. So this here can be used for an entry. And basing it off the 15 minute, I mean, if you're a swing trader or, you know, you're using smaller size, and you can look for a target up here. But I'm assuming we're going to fractalize this a lot more because a lot of people watching this tend to scalp. So what we'll do is, basing it off the 15 minute there, we're just going to quickly draw this here, plot it on the chart, and look for a fractalized opportunity on the 1 minute time frame. So it forms over here, price comes back down, and you can see there it is. There's your inversion for value gap. Now, is this something I would take? Possibly. Okay, because we have all of these aligning. We have our 4 hour, 15 minute, and our 1 minute entry. This is definitely something that I might partake in. But if you're still waiting for a continuation off of that, the market might or might not always give it to you. So you just have to be careful with that. But in this case, on the 2 minute, you can see that price still technically gave you an opportunity. When we look at this bullish gap right here, including, sometimes it's kind of hard to spot, but you always have to include those volume balances, including that volume balance right here. right? So if we include that, opposing candle, bullish reversal, type for MBZ, this is not even A plus anymore. This is like S tier, S plus. This is exactly what you want to look for every single time. When you see this in all this forms, that's just instant. Yeah, I'm going to take that, take it to the swing high, and there's your trade. This is still something I would take down here though, and then partake in that a little bit, right? So that's an example on gold and fractalizing the opportunity there without the indicators, right? But that's pretty much it. I hope this brought more insight into the reversal and continuation sequence with the model. Know exactly what to look for, what to be careful with, and how not to treat it as a pattern, but to treat it with a certain logic for opportunities. So as always, I hope this brought insight, and until next time.